Hi, and welcome to today's tax update brought to you from the Massachusetts State House right in the heart of Boston, USA. As we had no webcast in August, today's webcast will cover the developments for August and September of 2019. So let's move inside and start the webcast. Hi, it's the 30th of September and welcome to our 5-minute tax update, which for this month will cover developments both in August and September of 2019. A clarification was provided by the Tax Department on the recent amendment to the Special Defense Contribution Law on the interest earned by Cyprus tax resident and domiciled individual from corporate bonds, which is now subject to SDC at the rate of 3%. In a recent ruling obtained by our firm, it has been confirmed that the term corporate bonds includes corporate bonds which are listed on an overseas recognized stock exchange and is not limited to corporate bonds issued by Cyprus companies. However, what the ruling does not cover is whether the new law applies to both listed and non-listed corporate bonds, as this was not the subject matter of the ruling. In our view, and as the law does not specifically refer to listed corporate bonds, the 3% is applicable to all corporate bonds, irrespective of whether they are listed or not. Should the tax authorities wish to restrict this to just listed bonds, they should request a change in the law. Any other interpretation without a change in the law will most certainly fail in any challenge in court. So please follow this space for more developments. The Ministry of Finance recently announced that it will submit a bill proposing to increase the allowable deduction granted to individuals for contributions to the social insurance funds, life insurance and medical contributions from the current 1/6 of taxable income to 1/5. As mentioned in one of our previous webcasts, this is a relief measure against the newly introduced contributions to the ASC. The Minister of Finance indicated that with this measure, the government's intention is to encourage employees and employers to invest in approved insurance and pension funds through this tax relief, which ultimately is to the benefit of both the funds and the employees themselves. As mentioned in our previous webcast, the proposal came about after discussions with the Institute of Certified Public Accountants, the Cyprus Chamber of Commerce and Industry, and the Employers and Industrialists Federation. During September, there was also another interesting announcement by the Ministry of Finance. As per the announcement, a bill is currently being worked on that will oblige all service providers and merchants to accept payments through credit cards. This will not create the obligation for the consumer to pay by credit card, but if they wish so, the service provider or merchant will have no right under the law to refuse. This is a measure of the government to combat tax evasion by making the transactions easily traceable through the use of credit cards and at the same time reducing the cash settlements. In the same context, the Ministry of Finance is also promoting a bill on the compulsory submission of income tax returns by all citizens. This aim is for the tax authorities to gain a complete picture and greater control over the entire population. This does not mean that there will be a tax burden for those citizens who do not have the corresponding income, said the Minister, in an attempt to assure certain concerns expressed on this measure. Let's now move on to some interesting developments, and specifically to the most popular topic of the last few months, which is of course Brexit. As there are less than 5 weeks to go until the UK withdraws from the European Union, the European Commission has published a detailed checklist to help businesses that trade with the UK to make final preparations in case of a no-deal exit. As the UK would not be considered a member state of the European Union post-Brexit, the checklist clarifies, amongst others, that post-Brexit, the rules for direct taxation of companies in situations involving the UK will be those applicable to third countries. For example, it is likely that the EU Interest and Royalties Directive, which eliminates withholding taxes on interest and royalty payments arising within the EU, may no longer apply to situations involving the UK. EU rules for cross-border supply of goods and services to and from a third country will apply to transactions carried out with the UK companies. Certain goods originating in the UK will be subject to import duties. More details on this checklist can be found in the relevant link provided in the agenda to this webcast. We will close off today's tax update with a brief reminder of the upcoming deadlines. Today, 30th of September, is a deadline for the electronic submission of the 2018 personal tax return by self-employed individuals who do not prepare audited financial statements if their gross income exceeds €19,500. This concludes our tax update for this month. Thank you for watching.